Hi, this is Ian Coleman, and this is this week's video analysis for the dollar index and the FX majors going into the week 7th of January 2019. As always, we're going to start off with the dollar index, highlight what price formations we're seeing, our bespoke support and resistance levels, and basically what trade setups we're looking for this week. With regards to market movers, what's on the docket, I think the market could consolidate until Wednesday. We've got the Canadian interest rate decision on Wednesday, and then obviously Wednesday night we've got the FOMC minutes, and that could be the catalyst to push this dollar index to the downside. So anyway, we're going to break down the time frames. First time frame is the weekly chart. Here we can see that the dollar has moved back and rejected levels close to the 61.8% pullback at 97.86. We have seen a breakout of this wedge formation, but last week's price action was pretty mixed, pretty volatile. We posted a doji style candle or little net change. If we go down to the daily chart, and I think this is basically what we're looking at. If we go first of all to a measuring tool, we can see that literally for about 50 days price action has been very mixed, choppy. You could even say in a sort of sideways channel. We do believe this is going to be a head and shoulders, so left shoulder, head, right shoulder, a break of 95.58, a measured move target, which is basically the head to the shoulder projected from the neckline, comes in at 93.54. We have got some bespoke support at 94.87 on the way down. So if we go back to the weekly chart, remembering this level 93.54, we've got the measured move target for the wedge formation at 93.82. So this sort of band here is what we're looking for the next downward move in the dollar index. Reflecting that back onto the FX majors, again we'll just go for the weekly and daily charts. Bullish engulfing candle, very similar to the dollar index in the fact that we've had a little net movement really, just trading sideways, but this bullish outside candle does offer an upward bias in the euro dollar. If we go to the daily chart, here we can see again similar to the dollar index. We've had mixed volatile trading for the last 37 days. The fact that we're posting higher lows and we've got resistance here, this looks like an ascending triangle formation. A break of 115, the figure, which is this pivotal area, and 117.76 is the measured move target. Again, similar to the dollar index, we've got some bespoke support coming in at 115.81, which we need to be aware of. Sterling dollar, this candle or this chart I think is quite relevant this week. 5-wave move to the upside, choppy move to the downside. Levels very close to the 78.6% pullback at 124.28 have found buyers. We have posted a bullish engulfing candle last week, and in fact if you look back, it's actually engulfed or taken over 3 weeks worth of price action. So that's quite a positive signal, I believe, for sterling dollar going into this week. If we go to this time frame, which is something that we highlighted last week, we didn't expect such an aggressive pullback, but we broke this formation to the upside, and then we've retested and rejected this trend. The only thing that concerns me is that we've got bespoke resistance at 128. That's very close to the previous swing high, and I'm wondering, and again it's trying to forward project price action, but I am wondering whether or not we're going to get a reverse head and shoulders here. So this being the left shoulder, neckline up here, and then maybe just a retest again down here. So we've really got to break this level here, which is around about 128, the figure, for a stronger move to the upside. And above there we've got 131.29. So really the bias is still bullish in sterling dollar. Medium term bias is still bullish, but I think the sensible move is to buy on dips at the beginning of next week, and just to monitor whether or not we do get a break of this this bespoke resistance around about 128 the figure. Dollar Swiss still really sort of just consolidating. If we go to this chart, which is the daily chart, we can see pretty sideways movement for last week. We've got this previous support, which keeps on acting as a resistance. We've got bespoke resistance at 99.27, and that's close to the trendline resistance at 99.28. So that's our prime level to get short. And to the downside, I could see just range trading this next week. We've got a 161.8% extension level, excuse me, at 97.73, and then we've got our bespoke support at 97.63. So both of these levels are looking quite prime, and with them being confluence areas, it adds strength to the resistance and the support. So we're looking basically to range trade dollar Swiss next week. Dollar yen. Let's go to some different time frames. We mentioned this, the monthly chart, a break, or a clear break, we should say, of 107.52, and it looks like we'll make a prolonged correction down towards 92.50. However, the daily chart highlights a 5-wave move, this obviously being that, I don't know if it was a flash crash on the 3rd of January, but we did reject levels under the 261.8% extension of 106.27. We've really made quite a substantial recovery. To the upside, our prime area to get short this week is 110.47. That's bespoke resistance. If you look over here, it was also an area of support, so will become an area of resistance. Dollar CAD, and again we've got Bank of Canada on Wednesday. Can't really see any reason for a change of trend in this currency pair, but again, we'd prefer to sell into rallies as far as the dollar's concerned than to join this trend at the moment. The weekly chart, we can see levels close to the 61.8% pullback, finding sellers. We have posted a bearish outside week, offers a negative long-term sentiment for dollar CAD. If we go to this chart, we can see that we broke this head and shoulders formation that we noted last week. Measured move target was quickly obtained. We've even broken the 261.8% extension at 134.14. Commodity currency pairs have a tendency to run to the 423.6% extension, which is at 132.60. We've got bespoke support just in front of that at 132.90. So prime area, or target area really, here. If we go to the daily chart, and we noted this 9 count, this looked like a overextension of an Elliott wave formation. We've got resistance here at 135, so that would be our prime area to get short of dollar CAD. And like I said, there's sort of a barrage of support down here around about 133. So we'll have to note where we're trading, where dollar CAD is trading going into Wednesday's FOMC meeting, and basically look for the best risk reward trade, whether or not we would be selling into rallies, or if we're down at these levels, whether we then have a correction to the upside. And then obviously going back to the weekly chart, and we've got this Marabuzzo level which is coming in around about 135.10, so that would obviously be the prime area to get short. But dollar CAD, we are looking for a more aggressive move now to the downside. Aussie dollar, and again I think this time frame's probably prime. Daily chart broke this wedge formation. We then look for a 5th wave to be complete. We've now got a morning star formation, so the medium term bias again flips to the upside, along with that dollar index bias going to the downside. To the upside, we've got 71.60 as resistance. Support at the beginning of next week is 70.32. If we actually go to a higher time frame, although the monthly chart highlights a wedge breakout, and the actual measured move target for that wedge breakout is down here at 147, at 47.92. If we go to this chart, which is the weekly chart, and again the weekly chart's now highlighting a bullish engulfing outside candle. It did reach the wedge target, and this downward move can be seen in 5 waves. So we are expecting a prolonged move, if you like, to the upside, and that's pretty opposite of dollar CAD. What we should note as well, with regards to sort of technical analysis, a lot of the time the commodity currency pairs move first, and then the other dollar index pairs catch up afterwards. And obviously Aussie dollar, dollar CAD being the commodity currency pairs, looks like they've jumped on the dollar train, if you like, ahead of euro dollar, sterling dollar, dollar Swiss, etc. Euro sterling, some misanalysis maybe last week. This candle here is becoming a concern. It's the euro sterling weekly candle. We posted an outside bar. We did post a 13 count as well on euro sterling last week, which is an exhaustion count. What we were looking for, or what I was looking for, was at least a break higher from this previous swing high. So that previous swing high was located at 1998, and we actually made a new high of 1992. Next week we've got support at 89.22 and resistance at 90.006. So we're in between basically this support and resistance level. This would normally signal that a top's in place, but I have to express caution with that call. But the immediate bias is now to the downside for euro sterling. Euro yen. I think the weekly chart is probably the most important. We broke this wedge formation to the downside, moved to the 61.8% pullback level at 120.01. We've then seen quite a strong recovery. We've got bespoke resistance at 126.08 this week, and then reverse trendline resistance at 126.55. Again, we're looking to probably buy into dips up towards this resistance level on the intraday trades on the plays. Okay, I hope you found that educational, and we'll try and keep you informed with everything that we're seeing, and we'll send another video update next week. Many thanks.